My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate, teach. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Nvidia's stock is not defying gravity with this magnificent 16% move today. It's defying unwarranted negativity and cynicism and a picayune way of thinking about how stocks are hostage to an all-powerful Fed. On a day where Nvidia's proposal set the whole market higher, Dow jumping 457 points, S&P gaining 2.1%, NASDAQ pole vaulting 2.96%.
House of pleasure.
We need to analyze why so many people didn't want to buy a stock that tacked on a record $277 billion in one day, eclipsing a record formerly held by Meta for the largest single session gain in stock market history. First, let's just say I did my best to get you in it. I've been recommending Nvidia endlessly off multiple times a week, both here and in the club, for a decade now. I knew early on that I had the fastest, by far the fastest processors, much faster than traditional computing, because one of my old hedge fund clients was on the board of Intel back in the day. He was always upset that Intel refused to get into the speedy graphics processing unit business. But then CEO Andy Grove bridled at the thought, because back then, gaming chips were considered low end and not good for much of anything beyond pretty video game graphics. They were cheap, they were cheesy, they were worthless to him. Meanwhile, there were early adopters away from the video games, though. Companies like Audi North America that told me Nvidia's chips were so much faster than Intel's and everybody else's that it wasn't even a competition to see who should put the chips into the Audis. Oh, I pursued the Nvidia story aggressively. And after that, I came to you with the idea immediately. For years, I've told you that even though Nvidia seemed expensive, the stock would always end up looking cheap in retrospect because the actual earnings would be much higher than expected. I documented this time and time again, yet for ages, nobody seemed to catch on. Then you know what? Finally, I got so darn fed up with my inability to get people's attention to buy the stock that I just renamed my darn dog Nvidia in a blatant gambit to sell you on this amazing company. This $785 stock was just under $40 back then for the renaming. I think the dog is what finally got through to some people, because since that time, I am stopped a lot and thanked for Nvidia. But why did I have to take the extreme and shockingly irrational action of slapping the name Nvidia on my half pit bull, half who knows what rescue mutt to cut through the clutter? All right, let's figure this out. First, I blame the big picture strategists, the talking heads who endlessly fixate on the Fed, and then the Fed, including every Fed official who wants to share his or her opinion on interest rates. I'm not against keeping one eye on the Fed. That's essential, something I learned in 1982 when I was at Goldman Sachs. They reminded me that high interest rates can take money from stocks as an asset class, and of course, they can signal that there's going to be higher inflation. But even though the Fed took rates extremely high in the early 80s, nobody ever suggested you should avoid Microsoft or Intel because rates were volatile. You would have missed out on two of the best runs in history if you did that. These days, though, we treat interest rates as the be-all and end-all. Some of these pontificators make it sound like you shouldn't own any stocks at all if the Fed's not going to cut rates. Geez, I was making millions of bucks in the market back then when rates were twice as high as they are now, and this is coming after 11 straight hikes. Hey, look, I'm sorry to be so blunt about it, so meretricious, but I can't come up with a more diplomatic way to say it. I just think the Fed and the bond market and the yield curve have become blinders. They keep you from buying high-quality stocks. Or look at it like this. Do you think that Jensen Huang sat back at that Denny's where he thought of these graphics cards and said, oh, gee, I don't know, what's the Fed thinking? Or I'm worried about the 2s and the 10s. Or what's Loretta Mester saying? Too many people just dwell too much on what I consider to be inside baseball stuff. They miss the big picture. Pictures like the fact that we have great leaders like Jensen Huang or Steve Jobs, Tim Cook at Apple, Jeff Bezos, Andy Jassy at Amazon, Elon Musk at Tesla, Mark Zuckerberg at Meta. They can triumph over this noise. You think those guys paid attention to these faux constraints? No way. See, their eyes were on the prize. In the end, all this Fed talk is only relevant to super large hedge funds, the ones so big that individual stocks aren't enough to move the needle, so they don't even invest in them. These managers obsess over the big picture because they can only invest in the averages. Too much macro, not enough willingness to get your hands dirty, learning about GPUs versus CPUs, and generative this and large language models that. Notice how rarely they ever talk about individual stocks. Notice how rarely they ever help you. Then there's the cynicism. Oh, we got this bias in the media. Anyone who's made a lot of money is treated with a certain level of suspicion, with the exception of the saint of Warren Buffett. Everyone seems to be purely out for themselves. What if there are actual leaders who genuinely have a long-term vision, one that can make you a lot of money if you just stick with them? That's why I say own Nvidia, don't trade it, or own Apple, don't trade it. There's no other way to get through to people that these CEOs aren't simply overpaid carnival barkers. Or how about a belief that no company can be as big as Nvidia or Apple or the other trillionaire names? Their size makes them suspect. But why does Nvidia have to be held to the standards of the small fry when it's starting a new industrial revolution based on super-fast computing? It's not alchemy, for heaven's sake. It's blood, it's sweat, and it is indeed chairs. It is. All right, go back 24 hours if you doubt me. Go back to what people were saying. Say it over. Let's go back to what people were saying Tuesday. All right? The long knives were out for Nvidia here and many other places because so many people just know. Well, let's put it this way. I don't think the critics even knew what this company did. That's right. So many of them came on air. They didn't know what they did. They don't know what Nvidia is about. It's not just that they didn't do their homework, and believe me, most of them did. It's that they hadn't had a chance to go behind the scenes and know what this company is about. Nearly 5 years ago, I went to NVIDIA's headquarters, and Jensen Huang asked me to speak to a computer. What he said was itching to paint whatever I wanted it to. I mean, looked at scans. I told the computer, though, I wanted a Cézanne seascape. A few seconds later, there it was. The machine knew Cézanne didn't paint seascapes, but he gave it the old computer science try, and it worked. Jensen watched my amazement with glee. Next time I came out, he actually made me. That's right, with a Philadelphia accent and all, which both Cramer fave actress Kate Winslet and Jensen described as very hard to get right. Even I could barely tell the difference, except the Jensen-made Cramer knew more about how to put on a show than I did. Each time I come back from NVIDIA World Headquarters and try to explain my amazement, but nobody believed. One time I talked about how a fast food restaurant chain could replace the person on the drive-through speakerphone with a computer that speaks 27 languages, never makes a mistake, labor savings, errors banished, people of all nationalities picking your restaurant because of this NVIDIA system. Not one of these companies had any interest, not even a French fries worth of curiosity. If I were frustrated, you can only imagine what Jensen felt like. And then out of nowhere, ChatGPT. ChatGPT took the world by storm. Friend of Jensen's. The technology was based on everything Jensen had showed me for years. Understand, Jensen and his team knew it was just a matter of time, which is why he was ready with hundreds of thousands of graphics cards for that magic moment. So what did you need to get NVIDIA right? All right, you needed curiosity. You needed a sense of wonderment. You needed to suspend the endless cynicism. You needed to unshackle yourself from the chains of the macro. And you needed either some genuine homework or a qualified teacher like Jensen himself, or maybe you believe my analogy to Taylor Swift. Bottom line, in short, to nail NVIDIA, you need to do the exact opposite of everything that captures the conventional wisdom of modern-day investing in this country. What a crime against rationality. A certain amount of skepticism is always healthy, but if you're trying to make money in the stock market, you got to believe in something. If you can't do that, if you can't believe in the progress, if you can't believe in the people, well, you'll never be able to stick with a winner like NVIDIA. It just cuts against the cynical zeitgeist, and guess what? It keeps you in the trading chains. Ray in Illinois, please, Ray.
Yo, Jay Philly, chill. Big Windy City, booyah to you.
Nice. What's happening out there in Windy City?
Just a nice early spring day. My question is regarding a stock that has been an absolute beast for my portfolio. Given their current valuation and NVIDIA's recent announcement, they are creating a new business unit that will focus on application-specific chips, as Broadcom does. Is it time to ring the register, or does Broadcom have further to run?
I saw my friend Stephanie Link today, and we were walking around right here on the floor, and she and I were both singing the praises of ABGO, which is Broadcom. It is not the right time to go from Broadcom. You guys, hey, look, Hawk-Tan is a moneymaker. That stock is going to go higher. How about we go to Sam in Colorado? Sam.
Jim, how are you?
Doing well. How about you, Sam?
I'm all right, Jim. I think I got a stock for you that has two potential catalysts that could be massive, and one giant issue. We got to talk about Rivian. 2021 IPO, massive IPO, stock now down 90%. Curious what you think about the valuation now that it's down at $10 billion.
Oh, I was bummed today, I have to tell you, because I saw, I went to see Mr. Scringe in Brooklyn, and I was bummed because on his conference call he talked about historically high interest rates hurting the business, and I wish he hadn't said that. He said it several times. It doesn't jive with what I think, which is that right now it's tough to sell these cars. And I did think the Phil LeBeau's interview this morning was brilliant because he did put the feet to the flame, and I didn't come away feeling as good as I wanted to. Let's go to Brooklyn, which I didn't know this is in Kentucky. Brooklyn.
Booyah, Jim. I want to know your thoughts on Airbnb.
I like Airbnb very much. You know what? One of the things that just incredible. I mean, it ain't. Look, all right, riddle me this. Why does Brian Chesky not get the respect of so many of these other entrepreneurs? Because I think Chesky's fantastic. I like the app. We use it. It is a buy. No, it is a solid buy. Up 6 today. Hey, you know what? We're not done. Let's go to Dan in Georgia. Dan.
Hey, Jim. I'm looking to add a couple long-term marquee brands to my stock portfolio that pay dividends consistently. Mm-hmm. So I've been checking out Ford and Coca-Cola. Specific to Coca-Cola, do you think this is a good time to get in, or should I wait a little?
I think Coke's doing well. I mean, it's got a 3% yield. It consistently does well. James Quincy is a really good manager. It's not going to shoot the lights out, but you know what? We have some non-shoot the lights out stocks for the Travel Trust, and those do just fine. Not everything can be Nvidia. Actually, nothing. All right, here's the moral of my Nvidia story. If you're trying to make money in the stock market, you got to believe in something. If you can't do that, you'll never be able to stick with a winner like Nvidia. You'll never be able to own, don't trade. We made money tonight. California's largest utility is raising rates and restarting its dividend. I've been speaking with the CEO fresh off our earnings, and she's been delivering. Then Builders First Sources cemented itself as a power player in the home improvement space. Believe it or not, the third best performer in the S&P 500 the last 5 years, behind Enphase Energy, and yes, indeed, the one and only Nvidia. Can you imagine we have Nvidia talking about that, and then we have Builders First number 3. Oh, and how about this one that's a total winner, Wingstop? It's flying high today and up over 100% in the last 6 months. I'm hearing what's behind the recipe for success with the CEO, and do not forget, we care about percentage gains, not just marquee names. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.